let's get started.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. Hope you're doing well. And I hope you're ready for the big event. Like you saw there in the opening, if you want to support our sponsor, if you're looking to get funded this year and feel you are up to the challenge, check out DNA Funded. As always, when it comes to funding programs, I really only recommend you explore them or even consider them if you feel you are at a spot in your trading where things are in a good spot, where you actually have some consistency. And if that is you, if you feel ready to the challenge, check out DNA Funded and get 20% off. A lot of people just purchase challenges without discounts. Make sure you hunt for good discounts. And if you want to check out DNA Funded, like I said, the link is in the chat to get 20% off with promo code A1T20. All right, guys. So we have got today on deck some pretty big stuff, right? Today is the inflation reading that follows yesterday's producer price index numbers. Today we get of course, the consumer price index. We also did hear from the ECB this morning. Governing Council today decided to keep the 3 key ECB interest rates unchanged. Inflation is currently at around the 2% medium-term target, and the Governing Council's assessment of the inflation reading is broadly unchanged. New ECB staff projections, ... Okay, so let's just take a real quick look here as we get started at what's happening with the euro. So euro is pushing a little bit lower here this morning. In response to this, of course, you have the press conference for the ECB coming later, so we'll stay tuned on that. Also, I believe we are streaming in multiple locations today. We're streaming in Telegram, we're streaming on Twitter, we're streaming on YouTube. Hope everyone is doing well, and thank you for joining me here on the stream. Okay, so let's talk about what's going on. Obviously, just a quick mention to, yes, Bulent points it out, sad tragedy yesterday. Regardless of your political affiliations or views, I think most people can agree that violence has no place in, conversation. So that is all I'll say on that. Very sad for the wife and children of Charlie Kirk. So rest in peace. Let's keep going, jumping right into, of course, what is going on with today's markets ahead of the consumer price index. So the stock market is pushing higher as we speak, right? You have the stock market rejoicing yesterday off of the producer price index numbers, right? The PPI came in lower than expected, which was very much welcomed by the markets, right? If we just take a quick look here, inflation data, take a look at the producer price index numbers, what we can see here is that the PPI came in lower than expected yesterday. It was very, very welcomed, especially when we compare to, right, the last PPI number that we got, which was very, very hot, right? So what you're looking at here is the prior months and then this month's now. Last month with the producer price index, people were really worried about inflation because you had a much higher than expected reading, 3.3% year over year producer level inflation compared to the forecast of 2.5. This time around, though, we flipped that around and said we were forecasting 3.3, and inflation data came in at just 2.6%. So again, the idea here is that inflation actually cooled a little bit relative to forecasts. And so that was definitely welcomed by the market. At the same time, when we take a look at the consumer price index number, today we are expecting 2.9%. I believe that is correct. Let me just double check that that forecast is correct. Yes, 2.9%, guys, is our forecast for this morning in terms of the consumer price index. How does this impact you, and how can we trade based around this data point? Well, long story short, let's centralize it around the dollar/interest rates, right? So if you get a higher than forecast, right? So we're thinking 2.9%. That's what the Wall Street analyst expectations are, or 2.9% year over year inflation for the consumer price index. If this comes in at 3.1%, aka a hotter than expected print in inflation, what do you think this does to the dollar? Also, thank you very much for complimenting my jacket. Thank you so much. Nick's jacket looks like he trades bonds. Yes, thank you. I was hopeful. I didn't know. Look, it's always a gamble for me when it comes to style. I was like, does this shirt go with the jacket? And I left the house before my wife woke up, so she usually checks my style decisions. So it's up to YouTube to tell me gracefully how I look today. Just kidding. I'm not a very stylish. I do my best. Anyways, so yes, up. So people who pointed out, yes, a higher than CPI print would be bullish for the dollar to an extent. It would be bullish in the sense that rate cuts, we'd probably solidify. If you had a slightly higher read in inflation, you would probably solidify just a 1/4 point rate cut. Right now, there is some possibility, not a very big one, but the possibility that you get a 0.5% interest rate, right? So if we see a lower than expected 2.7, right? So if inflation comes in today at 2.7%, what does that do to the dollar? Obviously, it reverses the thesis. Really low inflation would be a bearish catalyst for the dollar. But there's another thing here tied to cool inflation that I think we have to be aware of, which is if you get really cooling inflation, could it also be cooling off because the labor market is slowing, the consumer is perhaps slowing down, which is, again, integral to this whole thing, right? You want to talk about the stock market. If it's going to keep going higher, the story is centric to the consumer. Because if people start losing jobs and prices are still going up, that combination has the recipe to produce a recession. I am not saying I think we are in a recession or going into a recession. I just think that that recipe is very concerning. The stock market is ripping higher because a couple things. Take your pick. You can come up with your own narrative, but the one that I think is most likely is that corporate earnings are still rocketing higher. And the prospect of rate cuts is, at least for now, being perceived as a very positive thing for the consumer and for businesses, right? So that's why stocks are up. Why could stocks come down? Well, because if the labor market data is truly cooling as much as I kind of think it is with what the data is showing us, right? If the market is seeing a true slowdown in jobs data, that is how you brew a recession. It's the labor market, right? Inflation hurts, but the labor market actually puts you in a recession if that significantly slows from here. So we saw major downward revisions 2 days ago, reported from the BLS, right? So major downward revisions. We've also been seeing a series of lower than expected readings on the NFP report, which is the big jobs number each week. Blunt, thank you very much for the super sticker, my friend. Appreciate you very much. 21 Turkish lira. How much is that in US dollars? It's got to be, last time I looked, I haven't even looked at the Turkish lira. Like it's been a tough grind here for the Turkish lira, 41. So it's, it's one of those things. The Turkish lira has just been, it's an example of places where inflation is really real. Like, we think inflation is bad in the US. There are many countries who are really hurting from inflation. It's not even comparable. Funny enough, don't look at it. Don't worry. I appreciate it, Blint. Thank you very much for the support, and really just for the kind comments. I appreciate it genuinely. Nasdaq's back to the highs. S&P's back to the highs. What are gold and silver doing in all this? Silver is up, right? Silver down a little bit on the day, but gold and silver, look, they're up. Are they due for some pullbacks? Maybe. But trying to call the timing on a pullback when gold is just in runaway mode, it's just so difficult. It's the same reason why, it's all the same thing for like the NASDAQ and for the S&P. When they're in melt up mode, it's just hard to call the top. NASDAQ is back towards the top end of this range, but we have been ranging for the last few weeks. A really hot CPI print could put this back on, could push us back down towards the low end of things. If you get a hot enough print today, I think that would really squash some of the optimism around rate cuts. If you have high inflation and cooling jobs data, or even rising inflation to the point that it takes away from that rate cut punch, right, at the party. The punch at the party acronym is the rate cuts from the Fed. If rate cuts get dashed a little bit from hot inflation, NASDAQ and expensive companies definitely could have some pullback. But again, we don't know what inflation data is going to be. We do have, to support this, we have oil prices that have remained muted to the downside, which is good for inflation, right? And so we'll have to see how that goes. Yesterday's producer price index, as I mentioned earlier, was cooler than expected. Trying to predict where this thing is going. Let me just be very clear. I don't try to make a huge prediction or bet big money on where I think inflation is necessarily going. But I do rely, just as I do with most things in markets, on the trend. And the trend has been, inflation's been trending up. However, it's been trending up less than expected. So if today's reading is 2.9% and we are just following the trend here, maybe we get 2.8. Again, that is not a prediction, but we'll see. If you do get a jump above forecasts, I think that has some concerns, right? If you have, okay, so 1 minute to go, let me go ahead and switch over. We'll see. Again, I highly discourage personally the approach of, oh, we got 30 seconds. Let me throw my whole account into gold shorts or gold longs or NAS longs, NAS shorts. Like I don't play that game. I don't scalp. I think it's a really silly one, and swaps or spreads go crazy on brokerages. So you're going to pay the brokerage if you try and do that stuff. In the end, it's a total gamble, in my opinion, to try and predict with 1 minute to go where the price is going to spike, because you could get both directions. You could spike up, spike back down, but stick around, because after it, we're going to actually be talking about what this data means on a fundamental level and where trends may be going in the next day, week, and even month. So coming in just about 10 seconds, we're going to get the consumer price index number. Let's see what we get for the prior month. Coming in hot. Let's see. About 9 seconds to go. We will see. All right, the consumer price index just released, at least an initial push lower here in stocks and in gold. Gold muted though, dollar index higher, stocks initially pushing down, but finding some resilience here. Look at that quick bounce. That's what I mean by, again, it's very hard to trade the spike itself. Price spiked lower, immediately shot back up. Let's take a look at the number, 2.9%. So reading came in line with expectations. I'm seeing it in the chat from you guys. So 2.9% pretty much came in line with expectations. Slight higher than expected uptick in the month-over-month reading. Unemployment claims is the story here, guys. Look at this. Uh-oh. Ladies and gentlemen, that is not what you want to see. Look at this. Disregard CPI for a second. That's a big uptick in unemployment claims. Unemployment claims went from a forecast of, we went from 237, we just jumped up to a weekly jobless claims of 263. Rate cut probabilities are up for sure off of that. Consumer price index came in line with expectations, so that's kind of not a big thing. But this, pay no mind to the man behind the curtain, because that's the man behind the curtain. Look at that, 263,000 jobless claims. That's a spike that we have not seen in a minute. That is a little bit concerning, to say the least. So I think the market is saying, oh yeah, we got rate cuts. Take a look at that. Dollar index moving lower here. I think the market is sobering up to what it just saw in the unemployment claims. Nick's jacket looks like he trades bonds. Lee, you and Ball Out both said that. It's funny. Wow. Guys, that is pretty surprising. I was not expecting that out of the unemployment claims. That's yeah, look at that. Rate cut city. That's where we're headed, ladies and gentlemen. Rate cut city. That unemployment claims, that is, you don't mess around with that. 263. Typically, when you start to see unemployment rate, the percentage basis rising, it starts in the unemployment claims. That looks like a pretty good start to me. Again, these numbers, they don't move that much. So let me show you. What's up, Garrett? Good to see you, my friend. 10-year at 4. Yeah, look at that, guys. We went to the same spot, Garrett. Check this out. 10-year just dropped like a rock. You know why? Again, today we met for CPI. The real story is unemployment claims. Right then and there, we just spiked on unemployment claims. That's big stuff. Check this out. So I don't have the data real time. I wish I did, but this will update within the next 30 minutes or less. But unemployment claims. So we are expecting 235. Guys, this is going to break our chart today. That's going to push us right on up to up here. Unemployment claims just blasted. Okay, that's a warning that we have got to pay attention to. You had unemployment claims rising the last few weeks. That's a spike. Gold and silver. That's it. I'm staying long gold and silver. I think to me, it's the best spot to be in. Not financial advice ever on this channel. I'm just sharing what I'm doing, but this brings me back to where I feel more comfortable, which is metals to the upside. Lee, okay, I get you. Wow, that's crazy, man. But that's what it looks like, guys. That's when you actually have jobs data deteriorating, the claims will start to show up. Really, really scary stuff. The labor market has been in decline for some time, and we've been on the lookout for a minute for what just showed up here, in my opinion, which is a jaw drop moment where you get, oh, unemployment claims, that's spiking. So again, stocks, initially okay with, all right, we've got in line with expectations inflation. But again, this just extrapolates further where I am at with this stuff, which is stocks at all-time highs with spiking unemployment does not match up for me. I've said this 1,000 times. I'm not short the market and have no interest in shorting an uptrend. But where I feel way more comfortable at this moment is long silver, long gold, which is where I have been because the fundamentals have been suggesting for a minute now, right? If you follow along, if you're here every day, right? If you're here every day, you know what we've been talking about. The dollar looks weak. The data suggests it looks weak. Many traders, many investors, many people are just ignoring this stuff. And to me, chasing stocks into an environment where the dollar has severe weakness ahead, in my opinion, I mean, it's already been weak, but continuation to the downside, this is concerning to me. So again, I'm not short the stock market, but I am long gold and silver because I think the dollar has more downside. If I'm wrong, that's what stop losses are for, right? If I'm wrong and silver drops dramatically, I'll trail out. But I do think that gold and silver are going to continue their run. They may have a pullback. They may retest some areas of support. But all the recipe here suggests inflation is sticky and that unemployment claims data is sour. That is not what you want to see. 263 is a noticeable tick up. This is a weekly number that we get. So it's not like a whole month goes by and we get hit with a shock. This is 1 week to, 1 week significant change, right? So to me, this signals gold and silver are the most attractive spots in the market on a risk adjusted, on a risk to reward potential basis. That's the spot. Owners family, thank you very much for the €2. I very much appreciate it. I don't ask in any way or expect any sort of donations from the stream, but I appreciate it. The bigger thing is if you really wanted to support the stream, you should purchase a copy of the EdgeFinder, not just for the stream, but for yourself. It's a tool that helps you to track institutional holdings, positionings, as well as what the economy is truly doing. Most people completely just guess on what the economy is doing because they just read a news article or they hear, hey, something's really good or something's really bad. But on this channel, what we do with the software that we build is we study the data and we lay it out on the table and we look at it all at once, right? Greatest salesman of all time. Thank you very much. Look, there is no disguising or secret sales pitch coming your way. This is an overt, you should buy the EdgeFinder because most traders do not focus on macro. They do not focus on what institutions are buying. They have no way of tracking this stuff. They're all doing it off the top of their head. So you should. It's not even a subliminal sales pitch. This software is worth every penny. If you do not have a copy, we're doing our biggest sale right now. It's 45% off for a limited time. If you're interested in getting access to the EdgeFinder, here's how you can get some information. You can head over to our website, a1trading.com. Just type it in on your browser, or we'll drop a link here in the chat to where you can speak directly to our support team. It is worth, like I said, every penny to get a copy of the EdgeFinder. You can explore all the tools that we build to help traders to actually scan markets. I've been using this on camera for years and have results to prove that what it has been able to help me with has helped to produce the results that I've done in the last few years. If you haven't seen that, I've done a full broker login, my full 5-year track record. You can go to the homepage of my YouTube channel, just search up Trader Nick. So yeah, I spoke to Emily. She has done me a great price. There you go. Take advantage. Don't miss it. All good. So with that said, let's keep an eye on gold and silver. Silver prices pushing higher here. Gold prices also pushing. S&P 500 a little bit lower. I remember when the EdgeFinder first came out, it's easily made me over 100K. I appreciate Nick and the A1 team. Marcus, that is awesome. Congratulations on your progress. Look, the EdgeFinder is not a holy grail. It won't do all the work for you. But if you recognize the value of having software like this and implementing it into your trading, if you understand that macro is important and most traders ignore it to their peril, you would get the EdgeFinder. It's worth every penny. I'm telling you, that's why it's not even hard to sell. It is a software that I wish existed years ago. That's why I built it. Our team has worked tirelessly over the last few years to get this thing into existence because traders need this stuff. Most traders, again, they only look at technical charts. You know who's looking at fundamentals? Hedge funds, big players. You might be just saying, well, Nick, you're just saying that because it fits your narrative so you can sell the product. I am, but it's not just a narrative. Turn on CNBC, listen to them interview professional fund managers, listen to them interview famous traders, and you see for yourself, are they talking about moving averages? Are they talking about RSI? No, they're not talking about Head and Shoulders. They're talking about the economy. They're talking about the Fed. They're talking about business financials, the real world stuff that actually drives prices. And if you don't have the right tools to track that stuff, it's understandable why you might say, oh no, I don't need that stuff, because you're kind of denying that stuff is useful, but you just don't have the tools. That's what the EdgeFinder does. So again, it is a sales pitch, 110%. There's no question. Head over to a1trading.com. You should explore the tools. We've made them as affordable as we possibly can because they're very expensive things to build and maintain. But we have traders all over the world using them. So let's see, where are things moving here now? NASDAQ's recovering a little bit. Gold, let's see what else. Gold's moving down just a bit here. Oil prices pushing lower here in response to this as well. I think the big story today is definitely yields, right? Yields pushing lower. Fundamental analysis is life-changing, used to be technical only. I think most people, again, that's where I started, right? Everyone I know who trades focuses first and foremost on technicals. And I think it's no question why most people lose money. They just stare at technical charts and they're kind of looking in the rear view. Whereas the front, looking out the front vision is like trying to make a call on where the Fed is likely to go next. Are they going to cut rates? Is the labor market materially worsening? And what does that paint for future prices, right? That's forward-looking stuff. I'm definitely getting the EdgeFinder next month. I'm getting VIP this month. Next month, getting EdgeFinder for sure. You should. Again, it's worth every penny. Make sure when you do get access, you take advantage of a discount. Send us a message on our website, A1 Trading website, but can't find the discount link. Easy enough. Here you go. Go to a1trading.com, 40% off top right. Do it on a desktop. It's a little bit easier, but you should be able to find it on the phone as well. There's pop-up as well. But yeah, don't miss it. My hair grown? Yes, it is. I'm liking it long, man. DXY also erasing those gains here. Look at this. I'm sorry, erasing those losses. A shot lower, pushed back up. Should the market be green on this data, Nick? Johnny, I would say that the market should not love this, but that the market is kind of in melt-up mode and finding any reason to keep going up. Like you can see the initial reaction was what you might expect. Oh, the labor market looks weak. Actually, this has been a theme, right? So check this out. A1 site is not working. I don't know why. Search up a1trading.com. It should be working. I just pulled it up on the site. But there's been a theme here recently, guys, where look at this. This candle and this candle. These are both the NFP reports that came in worse than expected. and the market dipped and then rallied, dipped, then rallied. You see what I'm saying? So my thought process is, I think that the market should look at this and say this is a little bit sobering to see the labor data weak as much as it is. But the market can do what it wants for a little while. It can continue to rally. I mean, there are positive stories out there. Like you had, for example, Oracle brought the whole market up by itself. Did you guys see this? Oracle's a huge company, jumped 37%. Yesterday, NVIDIA pushed higher. It's the AI trade that's keeping it alive. Like if you want to talk about what is floating the market higher, it's the AI trade. Google, NVIDIA, Oracle, you have all these companies, these individual AI names that are, exciting to investors. And people are saying, hey, there's huge potential growth there. And then there's this other side of the market, which is, you pull up the RSP, which is the equal weight S&P 500 ETF. And you can see, yeah, it's back to the highs, but it's not like breaking away to new highs constantly. And it's still sort of sitting back at its prior all-time high from November of last year. So, there is a difference here. There's a bifurcation, if you will, between the excitement surrounding AI stocks and the general market. So that's kind of where I'm at with this. Is I'm looking at this, I'm saying, okay, I know I've been on a rant with this stuff here recently with stocks or indices. I just think that they are richly valued, that they are expensive, and that they could get more expensive. Like I want to finish that thought with, and that does not mean they have to come down, right? What exactly is RSP? RSP is take the S&P 500 and instead of weighting it based on market cap, which is what the SPY does or SPX does, instead of doing that, like weighting a lot more to NVIDIA, to Apple, to Amazon, the RSP takes all the companies and equally allocates to each one. So it's an equal weighted S&P 500. It's different because right now the big players are pulling heavy for the big. And this is typically how markets go. So there's nothing like, oh, this is sinister. No, that's typically how markets go. For many decades, a small collection at the top tend to pull the majority of the weight. That's just human nature. Most of the time, a small portion of everything takes the lion's share. The way I think about it is like, think about like Michael Jackson or Madonna or like these famous musicians, right? They collected easily the vast majority of people's attention and listens and album purchases and all those sorts of things because they were the best, right? In the eyes of the public, they were the best. And so same thing with stocks. Stocks have a tendency to, all the attention gets really thrown heavy on a couple of companies. That's just how that's just how we do, right? Or just maybe even not necessarily humans. I mean, it's just the winner takes all kind of thing. And that is certainly what's happening in the stock market here recently. You have a collection of stocks that are doing incredibly well, specifically the AI winners. And then you have other companies that are not doing so well. Here's the stock market has not yet opened up, but look at this, right? A lot of stocks yesterday were down, but a lot of AI stuff was up. Oracle, ANET, Palantir, AMD, right? Look at the winners yesterday. NVIDIA was up almost 4%. At the same time, Intuitive Surgical, Salesforce, Amazon, Apple, some of the stuff that's not necessarily front and center on the AI, PayPal, McDonald's, Spotify, Abbott Laboratories, Chipotle, Walmart, a lot of these companies, I guess Meta is Frontlines AI, so that one was just down. But point is, small collection of stocks continues to power this thing higher. So to me, there is some risk there. To me, there is just the attractiveness to US stocks in general is tricky. I would much rather trade in favor of gold and silver in the meantime. And I know I sound, I sound like a doomsdayer recently, but it's just the data and it's just my system. I've traded this for a long time. I do what my system tells me, which is right now, the system is detecting that economic data looks pretty threatening for the macro outlook for the US economy. So that tells me US stocks are not super attractive. And it tells me gold and silver are nice alternatives. And it tells me to sell the dollar, essentially. That's kind of my bias in terms of where I'm at. Keep it really simple. We can go to the top setups page, which is what scans this data here. I'm going to remove minor currency pairs just to keep our watch list compact. Silver and gold bullish. Mostly bearishness for the dollar, even more bearishness for for the Canadian dollar. The dollar CAD getting a really strong reading here, but then everything else is bearish dollar, right? Aussie dollar getting a bullish reading, that's bearish for the US. Pound, Kiwi, all getting strong readings against the dollar. Peter Schiff was right. I like listening to Peter Schiff every once in a while. He is, again, you have to be careful because just like everybody, there's the perma bulls, there's the perma bears. Peter Schiff is a perma bull on gold and silver, which I kind of am too, to be completely fair. I think there are better times than others to buy and sell it. But I do generally think that his concerns are usually pretty valid. It's just, again, he kind of always dislikes stocks, which I don't always dislike stocks by any means. I just think they look a little expensive for the risk to reward. That's different than saying, it's in a bubble, it's all going to crash to zero. Like I'm not that level of conviction to the downside, right? If it wasn't for the AI hype, NAS would have been tanking. Ashlyn, I would agree with that. AI has been the savior of this market since 2023, really. Let's look at some dollar crosses really quick here. Again, inflation came in line with expectations. The bigger story today, actually, surprisingly, was the jobless claims spiked higher. Let me just see really quick if the data did update because I really want to see this chart. Unemployment claims. Sometimes it takes longer than others to, there it is. Look at that. 263,000. That is right there. That's concerning. Like, let me not take away from the focus on the macro today. This is not a pretty picture. Okay. That's the most meaningful spike in unemployment claims that we have seen in some time. He is a perma bull, but his analysis is completely grounded and logical. I agree. I mean, he's just very smart, dude. I like Peter Schiff's stuff quite a bit. Again, I think you have to be careful because you can't just constantly take in one perspective in markets, which is, I'm sure, I'm not saying you are by any means. I'm sure you listen to lots of different commentators, including myself. Thank you for being here. But I think it is important to round out who you listen to. I know, obviously I want you to listen to me all the time, but I recognize that it's important that you take perspectives from different people. And I think Peter Schiff makes a really logical case for gold and silver. The problem is he's always bullish gold and silver. So then it's kind of like if somebody's always bullish on something, you see what I'm saying? Like you want somebody at least who kind of acknowledges there are times to not be so bullish on gold and silver. There are times to be bullish on stocks and things like that. I think I've listened to Peter Schiff for 5-6 years now, and it's pretty much always gold and silver should go up and gold miners are undervalued, right? Again, I kind of agree, but that has not always been a great trade in the last 5-6 years. So what do you think overall? I've discussed it a couple times today. Essentially, I'm bearish the dollar because I think jobs data looks really rough. I'm bullish gold and silver because I think it's a nice hedge to some of the downside risks that I'm seeing. And I think stocks are expensive and not worth the reward to risk ratio. That's long story short where I am at with markets at this time. I'm not shorting stocks. I'm just not buying them. Gold and silver, I am buying on dips. I am already long silver. I wouldn't mind adding to gold as well if we got a pullback in gold. I like the 38.2%. There's nothing to do up here. Patience is key here because, again, if you're chasing this thing, you can get in trouble. If you're shorting this thing, clearly you could have been getting in trouble for the last, countless weeks. So my concept is dollar weakness continues to be the story for me, specifically being played out in the form of metals. My thoughts on bonds are that I think bonds. So here's my thoughts on bonds, right? You might say, well, Nick, if you think rate cuts are coming, if you think the jobs data looks rough and they're going to cut rates, I do see upside in TLT, the bond market, bond prices, not yields, but bond prices. But if I feel that way, I still go back to, do I want to buy TLT or do I want to buy gold and silver? And the answer is gold and silver. Why? Because gold and silver just have value that they don't have to explain, or there's no humans involved in gold and silver, right? It's just valuable because it's been valuable for a long time. It's precious. People hoard it. They humans are just obsessed with it, right? TLT, or bonds in general, the concern with TLT and bonds is that it's strapped onto US national debt, which maybe for trades can be a useful spot. But longer term, my concern with TLT is that you may be in a structural period where longer term interest rates remain high for a long period of time because people downgrade US national debt in general. People the bond market has already kind of been pricing in like, hey, you know what? Do you really want to lend your money to a government that is spending out of control and is on a lot of these nations? Same with the UK. We've talked about the UK, right? Look at yields in the UK. It's not the US, it's not the UK economy looks great and that's why yields are going up. The UK yields are going up because the economy is going to struggle to pay back the debt that is owed, leading to more debt, leading to more inflation. So people are saying the UK, the US, these places can be real careful lending money to them. So instead of bonds, I'd rather go to the alternatives in gold and silver. That's my thought. So we'll see. Watching your daily videos has been a major help. Thank you very much for watching. I genuinely appreciate everybody who watches my content, and I am hopeful that it does help you in your journey. Trading is ridiculously hard. It's not an easy place to make money. And I think anybody who sells it to you as it is doing you a disservice. Trading is really difficult. There are ways to get better at it. There are ways to make money doing it, but it's not going to be easy. I just can't get back to this guy, or I can't get past this, guys. Unemployment claims spiking like this is really concerning. We had already been saying on this channel, labor data looks rough. You've got things kind of materially showing weakness. And again, ignore the noise, because I'm telling you what, there's noise all the time. People say, oh, it's Trump, he's crashing the labor market. I can't tell you how many times this year I have read buy the stock market because Trump's in office and he's going to take it to highs, and how many times I've also read sell the stock market because Trump's going to crash it. People are trading. It's almost like people just emotionally trade and invest based on if they like or dislike the president. Just look at the data. The data has been materially weakening for jobs over the last 1+ years. It's been a trend. It's now seeming like it's accelerating. If your focus is obsessive over what the president's doing, again, leave that out of your trading. Scroll Instagram and TikTok if you want endless political doomsday stuff. But if you want to trade the real world, just look at the data. Ignore what's happening in the news and just say, look, jobs data, it's coming in soft. That's possibly one of the greatest utilities of the EdgeFinder to me, is that I could turn off the news, not watch one. I could delete all my social media, never turn on the news, and I could trade the same way. Why? Because the system just gives me the data. I don't need anything else. I don't need to listen to, oh, Trump's doing all this and he's ruining the economy, or, oh, Biden's going to send us into hyperinflation. Get rid of all that noise off my screen. Just show me the data. Look at the data, trade the data. And as I've been saying on the channel recently, SIBOW. If you don't know what SIBOW is, it's SYBOW. It's such a dumb saying. I've said it a couple times. But all that news stuff, to me, you can just side out with it. Because again, it's very, very toxic, very depressing and sad. If you want to trade, leave that out of it. Because I'm telling you, you can make some serious mistakes trading your, emotional responses to politics. Leave it out of the way. Trade the data. Focus on the data. It will guide you much better than the 24-hour news cycle, which is just trying to sell you into clicking their stuff and watching their doomsday scrolls, right? That stuff will really blind you. Just look at the data. Where do you find the data for the long term? Dev Patel, you are looking at it right now, my friend. It's right here. The actual data. This is better for longer term stuff. The surprise meter is better for traders, right? Because we want to look as traders, we want to look at how are things expected to be, and then how are they showing up, right? That's what the surprise metric right here looks at. If you're more of a long-term person, take a look at the GDP growth, take a look at CPI, look at the actual statistics. GDP growth in the US actually looks okay. CPI, a little bit hot. Payrolls, a little rough, right? So that would tell me, again, kind of where I'm at, which is dollar looks like it has some room to continue to go lower. Stocks don't look particularly attractive. But yeah, you are going to be, in my opinion, you're in a rocky situation to make a really strong case for buying stocks at these levels. Again, market can go up for, it's not to say that it can't go up. It's just that the risk to reward to it going higher to me just doesn't look great. Like, I don't really know if I was to go long the stock market, I'm not super bullish on it, but if I was, where do I put a stop? I mean, I guess I could put it below here. Maybe I could put it below here, but like, where am I going, right? We're at all-time highs. Can it melt through all-time highs? Absolutely, right? All-time highs can keep going, but I just lack the macro backdrop to support that. What do you think about alt season? I don't really get too far into crypto. I think Bitcoin I'm more bearish on crypto than I am bullish at this time. Again, not a hater of Bitcoin. I think Bitcoin longer term can be great. But I think you've lost a little bit of the momentum. Weekly chart still looks intact. So I think the bigger story is that if you get a recession, I think Bitcoin would struggle like immensely. That's my opinion on it. I don't think, like, I've heard some people say like, oh, in a recession, Bitcoin's gonna rip because the dollar debasement, whatever, people are gonna run to crypto. Maybe, but I still think it kind of trades like a tech stock for now. Maybe that changes in the future, and I'll eat my own words if that is the case. I have no problem with admitting a change if it happens in markets, but to me, crypto still looks like a tech stock more so than it looks like gold. I hope it changes. I hope it becomes true digital gold where people flock to it when people are worried about tech stocks, but typically it trades in tandem with tech stocks. When tech stocks, moved lower, Bitcoin moved lower, right? Bitcoin moved lower when they moved together, right? So I'd love to see that decouple, but for me right now, if I'm cautious on stocks, I'm also cautious cryptos, especially altcoins, which can get absolutely destroyed, and even a modest pullback in stocks. In terms of silver, I am looking for a break through these highs. If this happens, to trail stops. Also, guys, I gotta roll us into our next stream. Show host, sorry to Marco, kept him waiting here a little bit longer. Just a heads up reminder that if you want access to the EdgeFinder and do not already have a copy, it is currently on super sale right now. We're currently doing 45% off. If you want information about how you can get access to the tool, we can split it up into payment plans for you if that's easier. It's a one-time payment to get access. You don't pay every month. So if you are thinking about getting a copy of the tool, now is your chance to do so for a massive discount. If you're interested in getting that discount before it ends, I just dropped a link here in the chat. Click this link, speak directly to our support staff about getting a copy, and they can hook you up with the tool for the lowest price that we're offering all year long. So don't miss it. Take advantage of it. The link is in the chat, or head over to our website, a1trading.com. You can find it there. Up next, guys, we've got Marco taking over the stream. Stay tuned. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about, thanks to our partnered broker, Eightcap. Eightcap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with Eightcap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/Eightcap. That's a1trading.com/Eightcap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new Eightcap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/Eightcap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/Eightcap. Now back to the stream.
Hello everyone, welcome to my segment of the live stream. So starting next week, I will probably be streaming every single day. And yeah, I just wanted to touch on something that Nick has mentioned about the news. So if you take a look at this chart, this tells you that most of the articles from, let's say, 1900s to, let's say, 1970s were kind of neutral. Okay, so you can see the sentiment here on the side. So that measures the sentiment, and the x-axis is the time. So basically, you can see lately from 1970 up to now, most of the articles that are coming out in news outlets are negative. See, they have negative sentiment, right? So that is why Nick told you most of the stuff you see online is just purely toxic and is pure clickbait for you to basically click the article, because bad news sells the most. So if you can filter out through all of the negative news, if you can stay away from the negative articles, you'll have a much better day, and you'll have a much more enjoyable life. If you're reading doomsday articles throughout the whole day, well, you're not going to feel very good. So this chart tells you black and white. Most of the stuff you see online is negative to get you to click. So yeah, bad news sells the best. So what has been going on for today? Well, we had the CPI print. So we had the CPI print. We can see core CPI is the same as the forecast. Month on month, a bit higher. And the year on year is the same as the forecast. So let's take a look at the EdgeFinder US data. US. Let's see, CPI. Yeah, basically a neutral change right here, year on year. So basically inflation is staying the same. Now that may be a good sign for the Fed to actually cut interest rates. Maybe not just 25 basis points, maybe even 50 basis points. So let's see the Fed watch tool, which we pretty much take a look at on every single stream. So for September, of course, a cut is going to happen. October, okay. And by December, there's an 80% chance of at least 3 rate cuts of 25 basis points, as far as I can see. So yeah, looks like inflation is kind of staying the same. So you can also take a look at inflation CPI US. This is the September print. So okay, so it's a bit higher. So it's actually going a bit higher. Sorry, I got a bit confused. So it looks like inflation is actually going a bit higher, which should mean maybe the Fed will not cut as aggressively. Okay, and now the story is pretty much full. So we got all of the data points that I kept mentioning throughout these last couple of weeks. We got NFP. NFP came in at 22K, so much lower than the forecast. We got PPI for the US, which came in, which is a bit lower now for September compared to August. But CPI is climbing a bit higher. So I would say overall, if I take a look at these numbers, I would say rate cuts are, of course, definite. So rate cuts are coming, but I would say that the Fed is going to cut by 25 basis points in September. And then by the end of the year, maybe we actually get those 2 to 3 rate cuts. So we're kind of getting, or we're going to get what the market has forecasted, what the market has maybe even priced in as per the Fed Watch tool. It's not going to be massively aggressive cuts. I don't think we're going to have like 50 basis point cuts by the end of the year, so that we cut like 3 times by 50 basis points. I don't think that is realistic, but maybe 3 cuts of 25 basis points, that could work. So what is my opinion on the DXY? I did mention my opinion yesterday. It is basically this. So in 25, we got a massive sell-off of the US dollar. So people were massively selling the US dollar. People were kind of scared, afraid, uncertainty, tariffs, Trump, and the hedge funds especially hedged against the exchange risk of the US dollar, and they sold the US dollar aggressively. So that is reflected in the chart. Now, for the next sell-off, which many traders are advocating, for the next massive sell-off, I do think we need a big catalyst. I don't think the rate cut story, as it stands right now, is going to bring the dollar much lower. So yes, I think we can hit this support level, but I don't think that we're going to just crash lower like this. Okay, so I don't think that's going to happen. You would need a catalyst of US economic downturn. So you would need the US economy to suffer greatly. You would need to see continued bad NFP prints. But if the Fed cuts and if the markets are able to bounce, so if NFP is able to go back into a positive curve, into an uptrend, I think the US is still going to do pretty well, and the dollar does not have a lot of reasons to come crashing lower. So my main advice is I'm being careful. I'm not going like crazy deep into dollar shorts. I do have a euro dollar long, which has now bounced off pretty nicely from the break-even level. So maybe it can, I have a take profit set, so maybe it can hit take profit. Hopefully it does. And I do have a USD CAD short, or sorry, long. So I'm kind of hedged. I'm looking at both USD weakness and I'm looking at USD strength. Whichever happens, maybe, or I would like to see at least one of my positions work out. Okay, but my main point is I'm not going heavily short on the dollar. I'm actually betting even on the dollar to gain some value against the Canadian dollar, because the Canadian dollar has been performing pretty poorly, or hasn't been performing poorly, but the economic data for Canada is pretty bad. So the economic data is, let me just close something. So the economic data is doing pretty badly for Canada. Okay, let me check the comments. Let's see. Crypto is a Ponzi scheme. You grew a nice mustache the last time I saw it. Hi, Marco. GPUSD stronger. So how to learn fundamental trading. So let's do GPUSD. Let's check it out. For the pound and the US dollar. Now, for the pound, fundamentally, I'm very bearish on. I don't think the pound is doing well. I don't think the UK is doing well. I think the UK can be put into the same boat as the CAD, the Canadian dollar, because all of the numbers are coming in pretty bad for the UK. If we check the economic heat maps, the latest numbers are actually coming in bullish. So that is true. The very short term is coming bullish, but if you're looking at the long term, GDP, all over the place. Labor, is actually going higher. Okay, so unemployment is increasing. Inflation above target and going higher. So inflation looks pretty bad. Inflation looks really problematic for the UK. So yeah, big problems there. I think a stagflation is a very likely scenario for the pound. Now for the dollar, again, I'm not expecting a lot more weakness, but we could get some weakness. That means both the pound I'm bearish on the pound, and for the dollar, I'm kind of maybe a little bit bearish / neutral. Okay, I'm not as bearish as most of you guys. So I don't see a major opportunity there. If we go to the top setups, let's check that one out. GBUSD, let's see. Bullish, getting a bullish reading right now. I personally don't like this currency pair. It also looks a bit flat on the technical chart. So yeah, pound weak, dollar possibly a bit weak. You get flat price action. That's my opinion. How to learn fundamental trading? My best advice is go to Trader Nick's YouTube channel and type in my trading strategy. So you have a couple of videos where Nick explains exactly how he executes trades. Or you can go to my YouTube channel, check out my latest video. I think it's one of the latest videos where I explain my strategy. We trade in a pretty similar fashion. We use the EdgeFinder. And of course, if you want to get the EdgeFinder, I think there's currently a massive sale running. And you can use the discount code MARKO to get, I think it's 45% off right now. So definitely do check it out because there is a massive sale on the EdgeFinder. Nick and I both use the EdgeFinder, and in his video and in my video, we do a deep breakdown. Both videos are like 45 or 60 minutes long, and you can see exactly how we trade from the beginning to forming a trade idea to executing a trade. So start with those videos. After that, if you want, you can join the A1 Discord, also using my discount code if you want, MARKO. So you can join the A1 Discord and you can get signals, but it's not just signals. It's not about the signals. It's about the explanations behind the signals. So you get an explanation of exactly why we are taking specific setups. And with that signal, you can learn exactly how we trade. And then you can sort of copy our style, implement it for your own trading, develop your own trading ideas. So what is your view on oil? Let's see. Oil, US oil. Well, the NFP numbers in the US and the overall short-term poor performance of the United States does not help the price of oil. Oil usually goes up when there is a lot of demand, when there is a lot of consumption, when there is a lot of let's say, outperformance of economies. So when the economies of the world are doing really, really well. Right now, a lot of big economies are not performing as they could be. So they have some stagflation issues. They have some employment issues, inflation issues, GDP issues. So oil, I'm actually fundamentally bearish, if I'm being honest. If we check on the EdgeFinder, US oil, neutral. So neutral reading on oil, but I fundamentally am a bit more bearish than I'm neutral. Am I looking for sell setups? No. For me personally, oil is a very dangerous instrument, very dangerous asset, highly impacted by geopolitics. So I personally am being patient on US oil, and I'm looking at other things. I mean, right now, the best thing is, of course, gold and silver. Gold and silver are absolute rock stars in this environment. And that is my main focus right now. So gold and silver, if I can get that pullback, I'm looking for buy setups. Hey, Ballout, what's up? Yoshi says amazing insights. Always there is always something new to learn every live. Definitely, there's so much you can learn in fundamental analysis and in macro analysis. I mean, you never stop learning basically because the market conditions change. What are your thoughts about the DAX and the Nikkei? So the DAX, I'm just not looking at. I have my alert set for the DAX right there. So pretty much until we break the high, I'm not going to be looking for anything. I would like to see this happen, and then I would be interested. As it currently stands, price is just flat. I already took 2 losses inside of this range. I'm not looking to take a third one. So being patient on the DAX. Nikkei is looking pretty healthy. Nikkei looks pretty good. If we jump onto the economic heat map for Japan, lately the data has been bearish for the yen, bullish for stocks. That is the latest data. Let me do a quick GDP and the other stuff run. So that's okay. So GDP is okay. Unemployment, let's see, JPY. It's okay. It's okay. It's not going up. So unemployment is good, in my opinion, overall. Inflation. Inflation is above target. Going lower, but above target. So maybe, some room for rate hikes. I've been watching I've been watching Japan. I've been watching the yen. And I've actually been looking for USD yen shorts. So USD JPY shorts. What is the reason? Well, rate hikes for the yen. There has been talks of rate hikes for the Japanese yen. Even in 25, if you have been watching Financial Juice, you would have spotted the central bank, BOJ, talking about possible rate hikes. That is bullish for the yen, bearish for stocks. Now, of course, for the dollar, I'm a little bit bearish, if I'm being honest, bearish to neutral. So I was looking for a break lower. I just wanted to see a break of the level of support, and then I would be looking for sell setups. And then this weekend, you had Prime Minister of Japan, Ishiba, stepping down. Now, that creates some uncertainty. That means maybe the BOJ won't hike rates. That means, well, what can happen to the stock market? No one really knows. It creates some uncertainty. I'm not proficient in the economy of Japan, so that kind of spooked me a bit, the Ishiba stepping down. So I'm waiting it out. I'm being more patient. I think there are better opportunities out there. So yes, Nikkei looks good. If we check the top setups, Nikkei, neutral reading. I mean, it's in a massive uptrend. There's no doubt that this is in a massive uptrend, and most likely it's going to continue. I'm just being a bit patient on Japan, just a little bit patient. U.S. economy is done by Q2 of 2026. That's been said for like the last 100 years that the U.S. is done, and look at what happened. So U.S. will be the last country to be finished because it's the strongest, it's the biggest, has the biggest army, so it can pretty much bully every other country into submission if it wants to. So I think there's a lot of other countries that will fail first before the US does. Okay, recession is almost certain. Well, maybe. What percentage returns can you make a month, Marco? I think 2%. If you can make 2%, if I make 2% per month, I'll be very happy. So if I can make 2% per month, that is already a massive achievement. If I can do 2 to 5%, that's going to be outstanding. So if you're wondering about realistic goals, 2% per month, if you can do it, it's a massive achievement. So let's see. What is your channel name? My channel name is Marcos Trading Journey on YouTube. So you can see it under my name in the stream. Or in the comments, you can find it basically in the comment section as well. Right now, we are in the last phase of economic cycle. We are dragging, possibly, but I'm waiting for the data. The data is going to be the thing that confirms the recession. Can we go over Aussie dollar quick? Okay, let's do Aussie dollar. Aussie dollar. I think Aussie dollar had a breakout to the upside, so that's good. Nice breakout of the high. It didn't close above, so not my favorite price action. Check the top setups. Bullish reading, that's good. Check the latest data for the Aussie. Bullish, okay, that looks good as well. That looks healthy. Well, I'm not looking for entries, but it doesn't look that bad. So what I would like to see is a bit of more of a breakout and then a retest, and I would probably consider getting in on a buy setup. So the Aussie actually looks interesting. Let me add an alert here. If we can go up a bit more, I may check it out for a buy setup. So yeah, overall, it's definitely in an uptrend. We have quite a lot of space until this swing high, until we hit major resistance. So we have a pretty big area where we can go up. I like this. Whoever recommended it, let me check. The Soccer Boy. So nice recommendation. Also, the EdgeFinder is bullish. So I like this. I would just like to see it break out a bit more to the upside. It's now on the watch list with this alert. Okay. And also, I wanted to take this time to mention DNA Funded. So DNA Funded is a sponsor of the A1 channel. And if you guys are looking for a prop firm, make sure to check out DNA Funded and make sure to use our discount code, which is A1 Live. Okay, so you get 25% off with our code. And also, if you reach out to our support, you can do so by clicking the link in the description of the stream. You can get an additional 5% off. So you can get 30% off a challenge. Which one do I recommend? Well, if you are a proficient trader, if you have an experience, if you have a lot of experience, if you have a trading edge, I go with a two-phase 100K account. That makes the most sense in my opinion. So you get 30% off of this price if you reach out to our support. So yeah, check out this prop firm. It's reliable. The pricing is fair, and yeah, it has fair conditions as well. So give it a look if you want to expand your capital. But please, if you're a beginner trader or if you're not sure about your trading edge, don't do it. It's definitely not for you if you're not proficient. If you're not proficient enough. Okay, we still have a couple more minutes. USD yen. USD yen. Well, I did talk about the USD yen, USD JPY. So for USD JPY, I want to see it break the support level. Also, the thing with Ishiba, PM of Japan, I'm not really sure if I want to go short anymore. You know, there has been talk of rate hikes. So rate hikes for the yen. Now maybe things will change. So not my favorite pair right now. I think there is better opportunities out there. Carlos says, hi, Marco, could you post the link to the fundamental video you recently mentioned? Well, I cannot do it right now, but there is a link to my channel in the chat. So just go to my channel. It's one of the last 2 videos on the channel that I uploaded. You'll find it very easily. What about gold and silver? Let's do gold and silver. So I'm super bullish. 2 of my favorite things right now are gold and silver. I just think they're a bit overextended. So I like the overall story. You know, no matter if you get rising inflation, gold goes up. If you get rate cuts, gold goes up. If you have bad US data, gold goes up. So pretty much in every single scenario right now, gold and silver will fundamentally rise to the upside. I expect a bit of a pullback. I think this move is now very overextended. I'm looking at this level of support. If we do hit it, I'll get in with a buy limit or a market buy. So I'm looking at a support level for a pullback. Let's see. Gold, which levels am I looking at? Well, I would like to see us hit maybe even a bit lower, maybe even this level. or this level of support. This one is going to be really significant. So if we can go down to those levels, pull back for around, let's say 4%, 5%, I'm getting in. If gold decides to explode without me, so if it decides to do this, that's okay. I won't be able to enter. So if we get another move like we got here, where there was never a pullback, we just went up, never touched the 20 EMA, part of the game. So I just think it looks overextended here, and I don't want to be the last guy to buy. You don't want to be the last guy to buy. Max says, hey, Marco, you keep USD CAD, right? It's still holding well. So USD CAD is, yeah, it's doing okay. Euro dollar is moving up a bit on the CPI print. USD CAD, and I'm going to do a minute more because I'm done with my segment. So the last minute, but basically, I'm in euro dollar, just got taken out of euro GBP. I moved my stop loss to this level. So this trade is now done. It's a small loss. USD CAD, I'm in. So USD CAD has been running some decent percentage. Now it's back to, it's kind of retraced on the day. And I'm looking for active buy setups on gold and silver. For the NASDAQ, I'm looking for a pullback. So, I mean, pretty much we can remove the flag because I'm looking for the same thing on the NASDAQ and on metals. I'm looking for a pullback to support. So I'm very bullish on all three, but I think right now they're a bit overextended, especially the NASDAQ. NASDAQ has been slowing down drastically here on the top. So that's my watch list. That's about it. Let me quickly run through the rest of the comments. Quite a lot of comments. So yeah, that's about it for my segment. Do check out DNA Funded with our discount code A1 Live if you're interested in a prop firm, and I will see you guys in the next stream. So the next big event is going to be 17th of September, the Fed event. Watch out for that. See you. Goodbye.
If you're we often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Okay, what's up, people? Hope everyone is doing well. Glad to be back on the stream. So as always, we'll go through a bunch of markets. I'll take a look at some pairs I'm interested to trade. I've got a few of them, which I'm keeping a close eye on. A couple of USD pairs, a yen pair as well. And if you do have any pairs, any markets, any particular time frames you want me to take a look at, drop it in the chat, and I'll be happy to take a look and discuss. But we just had some news, of course, and the markets have reacted to it. USD has been a very choppy currency as of late. I've been back and forth with USD. The way I see it, price is still basically within a range. So I'm more or less neutral. I mean, price did close back within the range here, which is a bullish signal. Price is now back within the low. We could find support and still could potentially rally. If price does continue lower and start to create some new lows again, then we could be looking at the continuation of the bearish trend we've seen throughout the year. And of course, that would take us back to lows. So if I do see price continue bearish as we break through support, that is basically what I'm looking for in terms of confirmation for USD weakness, because this support has held price really, really well. And every time price tries to break through, we keep bouncing, and we did see somewhat of a breakout at the start of this week, but that again was put to bed really quickly. So if we can make our way below that support level, 97.6 roughly, and really break through that, that's really what I'm looking for to confirm that bearish bias to me. Otherwise, if you do start to dance and reject this area some more, we could very much see a push back to the upside. So technically, I would say DXY is still looking unclear. Despite the bearish momentum we're seeing right now, it hasn't really done anything in terms of taking out any key structure or continue a move. It's just kind of just fluctuating. So if we can drop lower, great. That will put me pretty bearish on USD. If price does start to bounce, of course, at least the move back to the higher end of the range, which will take us maybe 98.6. That's kind of more or less where I'm looking at. And this is where we have been stuck in between. But the pairs I'm interested to trade in, Aussie dollar, I quite like where we're positioned, and I'm keeping a very close eye for some shorting opportunities. It's definitely more of a aggressive trade because we are counter trend. If you are going to take some shorts here, the trend, if I zoom out, you could definitely argue that is a bullish trend, and I wouldn't argue against you. It's a very, very choppy market, so it's not like it's a very aggressive bullish trend, for example, like gold. So it's not necessarily trying to short a market that is absolutely flying, but it's more of an aggressive trade. But I like the trade because of how corrected the market is, and the fact that every time price does sweep a high, we do see a lot of downside and a lot of selling pressure. You can see every time a high is created, the market does roll over, and we did that on their last attempt, and I'm looking for something similar again. Perhaps a big double bottom, big double top, sorry, could be in play. So I like where we're located. I like how price is moving, how corrective it is. Yes, it is a bit of an uptrend, so I have to be careful with momentum, but if I can see some aggressive rejections here and price really finding resistance in the form of wicks, bearish engulfing candles, that's essentially what I'm looking for. I think this would be a great place to take short. If USD does gain some strength, you'd be in the front line to take advantage of that as well, with some safe stop losses above the high and a lot of downside potential. There's key structure here that could be a nice target initially. Of course, you got a support down there that could be a secondary target if things go very well. But in terms of where we're positioned, I'm not quite confident on this bullish trend for Aussie dollar. I wouldn't necessarily bet for it to continue, and taking shorts for me would be the sensible trade. Or again, if you're not looking to go against the trend, you can always just sit on the sidelines, but I wouldn't be looking to try and buy a market like this. It looks really, really tired and not seeing much strength, especially with the indecision with USD at the moment. So Aussie dollar is on the watch list, keeping a close eye at this area. Not quite there yet. I want to see if you can fire some more wicks to the upside, because this was a really aggressive close on the last 4 hour candle, which provided a big wick to the downside, again implying that momentum is failing to go lower, and of course with a pretty strong close as well. So I want price to start showing inability to go higher and give me some momentum in the opposing direction, and that's kind of what I'll be looking for in terms of an entry. So that may or may not develop. If USD is going to be weak, maybe price explodes to the upside and I don't get an entry. It's critical that I do see price reject well. That will then set up the trade. CAD Yen, I like longs on this one. This one is not quite at the level which I'm looking to buy from yet, but it's not too far away. And I'm kind of hoping if we can see one more push to the downside and see price take out this low in a similar fashion to what I just mentioned with Aussie dollar. See a push to the downside, take out that low, and then see a bounce off this area. If I expand to the high time frame for CAD Yen, we do have somewhat of a bullish trend here. Quite corrective as well. Probably not as corrective as the Aussie dollar trend. A bit healthier, if you will, but still a trend nonetheless. And I'm essentially looking to see if I can buy the low, the next higher low that price could form and perhaps continue the trend. Again, doesn't necessarily have to continue back to highs. I'll be very happy if I can get a buy entry in this area and take it back to resistance here. I'll be very happy with that sort of return. If I can get a good entry, I could be walking away with 1 to 3, 1 to 4, maybe even more than that return on the trade. So that would be a great trade. Nonetheless, I don't necessarily need price to go and attack highs, but if things look good, I might look to hold on to positions. But yeah, I like CAD Yen, where we're positioned really well. Come into a nice area in demand to our left here. I like this support level. If the market can pierce the low, reject well, I think this would be a smart place for a buy. And then I'll manage from then onwards. And dollar CAD, I also like the shorts for this one, which is a bit of a contradicting bias, because I did say I like the shorts in Aussie dollar, which will mean that we do need USD strength to come into play to get that bearish move for Aussie dollar. But if I'm looking to short dollar CAD, it means I need some weakness for that to play out. So there's a bit of a contradiction there, but I'm going to stay on my toes. Like I said with the DXY, I'm not too confident with a particular direction right now. So I'm kind of just playing both sides and seeing which setup looks good and fits the plan well. I'm a very technical trader, so I'm just focused on taking a good trade in terms of the technicals. If that does fit the plan well, I'm there to take the position. I wouldn't take opposing positions. So if I was short dollar CAD, I wouldn't then jump into Aussie long. It'd be one or the other. I like this opportunity as well. Similar to the Aussie dollar trade, I want to see if price can push the highs. I did take a trade earlier this week, which was a loser. I did enter some shorts here as price came back into this supply zone. Didn't go to plan, didn't really see momentum continue. Was looking for at least a push into the low there, but unfortunately didn't really see that momentum continue, and price did hit my stop. But I am looking for another entry to take advantage of that move, and this would be the next entry. If price was to rally through that, I would change my bias altogether. And the reason why I like dollar CAD especially to the downside is if you zoom out to the weekly chart, we are respecting a very, very significant level of resistance. So if price is holding to that, I think there's a lot of room to the downside. And yeah, if I can take advantage of that, maybe a push to these lows, which doesn't look too far on the weekly chart, but scale down to the 4 hour, it's a pretty tasty move there. So I don't mind some shorts on dollar CAD as well. So I'm keeping an eye on both of them. Like I said, very neutral or just undecided with DXY right now, but hopefully we can get some development on that part. Hey, what's up, Ahmed? Welcome to the stream. Hope you're doing good. Yeah, I mean, the thing was with prop firm challenges, the key thing is to make sure that you position yourself well in terms of making sure that you're ready for the challenge, ready for the rules that you're likely to face, of course, in terms of risk management, in terms of drawdown, in terms of profit targets as well. So make sure you do put yourself in the best position possible. And the worst thing to do is take prop firm challenges early when you're not quite ready. They're very, that was a bad stutter. Very accessible. There we go. But which is good and bad, because of course it's good because you want it to be to help traders worldwide. But at the end of the day, people who are not quite ready will take some unnecessary purchases and kind of throw money away, unfortunately. But the key thing is to make sure you put yourself in a good position. Again, that comes with practice. That comes with time spent on the charts, and putting yourself in the best place to succeed. But yeah, USD, I'm just not a big fan. We had NFP last week, we had CPI this week. I was kind of hoping for dollar to really get going, and unfortunately dollar's still very flat. I don't know what dollar's waiting for. It's waiting for something to happen. Hopefully CPI is going to do the honors, because although CPI has been released, momentum is still kind of active right now, so potentially price could still continue. We're looking pretty bearish. By the end of the day, maybe price is trading below the lows here, or maybe by the end of the week. So CPI is still potentially doing its thing, and as I said, if dollar does take out the lows and does continue very well, then yeah, I am looking at more downside there for USD. I'll be pretty bearish, and hopefully I might be able to find some shorts on dollar CAD, but then I do worry if price will actually get to my level, because if USD does fall now, maybe price just does tumble from here rather than the high. And I really want to take my position at the high and get some stops at that level. I can see prices rejecting resistance, but that's not really part of the plan. I mean, this could be like a big head and shoulder pattern, but I'd rather get my entry there, stops above the high, to be honest. So I'll let this slide. Hopefully we can see that. If not, there's not much I can do. Again, I'm more focused on the opportunity rather than just taking a trade just because it might play out. Just hear you say bullish signal. Is that for a certain pair, or you just want me to say something's bullish? Hey, what's up, Malik? Hope you're doing good. Hey, Bashi, welcome to the stream. Hope you're good. No worries, man. No worries. You caught the stream here, so you are forgiven. In terms of the yen, yen's been choppy as well. Yen's been so choppy as well. DXY and the yen not really providing much answers in terms of direction. Not particularly great, because normally if the dollar's flat, sometimes the yen is doing its thing. So I'd focus on more yen pairs and vice versa. But in this particular moment in time, this is the yen basket. So this is yen looking against other major currencies. So you can see the yen's been flat ever since really mid-July. So the best part of 2 months, really. It's almost mid-September. So yen being very choppy, DXY being very choppy. I'm waiting for both of them really to make a move, to be honest. I do have some opportunities, like I've said. I like CAD yen longs. I like dollar CAD and Aussie dollar. I wouldn't mind some dollar yen longs as well, even though this is extremely choppy pair recently, because of course you got two choppy currencies combining. So this is looking really, really choppy. But I wouldn't mind a push to the low here and just buying at the low of the range. If I see healthy rejection, I don't mind that trade. If I can get it halfway, I think that would be a great trade in itself. Book some profits there, maybe lock in some gains, and then maybe if things go very well, we can see a push to the upper end of the range. And the reason why I like the buys more so than the sells is just because there is somewhat of a bullish trend here. It's quite corrective, and I do think eventually dollar yen will take a big dive. So I actually am pretty bearish long term for dollar yen. I'm looking to see if I can at least capitalize on another bounce off the low of this range here. Maybe that does result in another swing back to highs, and then maybe the sell bias kicks in potentially. But I think this is a worthy area to look to buy the market, provided we see some healthy rejection in those parts. But for the most part, again, really choppy, which again is not the best conditions. Primarily, us traders want trending and markets to move, but at the same time, there are opportunities when things are flat. Selling the tops, buying the lows is where you want to position yourself. In the middle is where things get very, very difficult to maneuver, and you could take a lot of unnecessary losses in those areas. So do watch out. But dollar yen, I wouldn't mind some buys at the lows. I would prefer CAD yen, and I don't like getting into multiple pairs of the same correlation. So if I do get into CAD yen long, I will not get into a dollar yen long until I can get CAD yen to break even. Therefore, if something was to happen, I've only got risk on one position, which is fine. I can stomach that. I mean, I can stomach multiple, but in terms of just keeping things simple, I don't want to overdo it on a particular currency or on a particular idea either, really. But dollar yen, I could potentially see myself buying if maybe CAD yen doesn't do its job in terms of getting to those lows and seeing the rejection I am looking for. And in terms of gold and silver, these guys have just been crushing it, particularly gold. Silver is a little bit dry at the moment. You could argue probably gold seeing a little bit of that as well, failing at highs, pretty big wick there. Of course, gold has just been an incredible up move, so it's going to need that retracement at some point. Gold's not going to just bullish consistently. It's going to have its down moves, just as we saw in previous bull runs. Even huge moves like this, we will see a correction. Is the correction going to happen now? I'm not quite convinced just yet. I want to see convincing momentum break lower. Then I could say, okay, maybe we are going to get that correction, and then maybe price is going to continue later on. So until I start to see conviction lower, especially on like a 4-hour or daily chart, I would still stay very, very bullish on gold. And I like what we're doing here, especially for intraday opportunities. Price is back at support. It is still respecting it. Did break through a little bit, but I would say price is still respecting that support level. So I do think there's some nice intraday buys for gold. Just taking advantage of the theme of the market, the environment, which is very bullish, seeing a lot of momentum. Buying at support is normally a good bet in these conditions, and taking a move back to resistance makes a lot of sense. Maybe price creates some new highs as well. Of course, I would say gold is quite overextended, so I wouldn't be as greedy with the buys in terms of, okay, I'm looking to take this to the moon. We've already been to the moon really with gold. Yes, we could always go higher. And yes, I think buys are still the best bet. I think sells are still quite aggressive if you are going to short gold. So I think buys are still the best bet. But at the same time, be prepared that maybe a pullback is on the card soon. So yeah, trail stops, see how far you can take it. But I am looking at top forming soon for gold. And if you do pull back a little bit deeper, I like this area here as well. Nice demand zone. I think that's also a smart place for a buy. Lovely consolidation. We just spit out a lot of momentum there. So prices come back to test that area. I think we're likely to bounce and see a continuation. In terms of silver, silver's an interesting one as well, but it is very flat at the moment, which isn't necessarily something to be worried about in terms of, oh no, is price going to sell off? It could do. It's 50-50, I would say, with a range. If you don't read too much into it, it's just price could either continue or it could reverse. But at the same time, even if it does break down, I would see that as an opportunity to start looking to buy it back up again. So if price does form somewhat of a top here and does break lower, from a swing perspective, my eyes would light up because I do think there would be a nice opportunity to long. I quite like this zone here. Lovely consolidation, really aggressive break to the upside. There's a lot of momentum from that zone. If price was to come back and retest that, provided we see some healthy entry confirmations, I think that's a great place to long and follow momentum. And of course, if price does just break to the upside here, then it's just more kind of intraday, smaller time frame pullbacks you're looking for, perhaps the retest of the high and onwards and upwards. I do think silver has still a lot of room to the upside. Gold's at all-time highs, but silver still not quite there yet. We're looking around 50 for all-time highs for gold, for silver, sorry. And we've just breached 41. So there's still a bit of a gap left. You can see that we are steadily picking up momentum. So that is something to keep in mind. We've been very, very choppy with silver, but this trend here since the low has steadily been picking up the pace. So I can see a world where silver just explodes, really kind of picks up the pace and do kind of what gold does, or gold has been doing. So the next big pullback, if it does happen, I think that would be a very smart trade to take, especially from the impression that, okay, this trend has room to the upside. We're picking up momentum. There's still a lot of room for a big move. So silver is definitely on the cards for a trade. Of course, as we're consolidating now, not much to do. There could be some short-term sell opportunities at the high of the range or at the low in terms of buying it, but not so much my interest. Just looking to see if I can catch either breakouts with pullbacks or more so this opportunity. This would be a very nice trade if that could develop. And then targets back at highs, but again, trying to see if I can actively trail and take price higher. Mooning back a few times, exactly. Looks like gold is pushing to the moon, and probably further than the moon. I don't know what's further than the sun. It's probably head to the sun now. Nick won't like that. Oh yeah, Nick's in a silver position, isn't he? To be fair, sure, Nick might not like it in terms of the moment, but I think Nick will probably be looking to pick up some more buys. So if it does happen, maybe does trail out his original position, but I'm sure, well, I would hope so. We do see another higher low and the trend does continue, and there'll still be more opportunities to buy. But of course, yeah, if you're in a trade, you want it to fly. And I mean, for my sake, I hope it's a pullback. For Nick's sake, I hope we do continue. But yeah, I would like a pullback on silver. But yeah, very bullish for this one. Same with gold as well. I do prefer silver though, because we're not at the all-time highs. I always like the opportunity for price to get somewhere where it's likely to go. With gold, it's kind of already got there. With every move gold takes to the upside, it's creating new prices that we haven't been before. So the demand isn't quite there. Well, it is there clearly, which is why it's pushing up higher. But with gold, for example, we've been here before. We've seen price make that journey before. Therefore, I do bet on that happening again. And especially with a clear-cut trend like this, I think we're looking pretty good to see that happening again. So I'm not so concerned really with gold. I'm more concerned with silver. And we'll keep a close eye on that one. But this is more of an opportunity for maybe next week for me if we do get that pullback. But as of now, Aussie dollar has my interest because that's at the moment trading at a price which I quite like the idea of shorting. Just waiting on a good confirmation, really. It looks like we are pushing higher. Again, nothing to be alarmed with just yet. Again, it's 50-50. See if I get the entry or I don't. If price does just fly, okay, so be it. I walk away, move on to the next setup. If price does start to stall here, wicks, show failure, show some strength back in again, well, hopefully I do find myself an entry. So it's kind of just in a critical area, keeping up to date with price. A big part of trading is reacting to the market, really. I might come into the market with a bullish bias, but I might walk away taking a short position if things change. So keeping a close eye. AU pairs seem to be doing well. Yeah, it does look like Aussie has been quite strong. Of course, Aussie dollar's up there. I think Aussie yen has been loving life as well. That's been pushing up. Yeah, that's just created new highs too. funny, Aussie yen and Aussie dollar in similar situations taking up major resistance. Interesting. Pound Aussie has been on the way down. So again, showing strength in Aussie. Pound hasn't been that, has been on the weaker side of things, but of course Aussie strength is showing its strength there, and we actually are starting to try and push for the lows there too. Aussie CHF, I'm pretty sure that's made a way up as well. Yep, it has been really corrective, but it's been pushing. So yeah, Aussie has been a pretty strong currency at the moment. Very, very strong currency. I'm looking to see if I can short that. No positions at the moment. I did have a dollar CAD position, which I stopped out earlier in the week. I'm looking to see if I can get back into dollar CAD at a slightly higher price to short it again, which is up there. So that's kind of where I'm waiting for dollar CAD to get to. No positions at the moment. Haven't really seen many opportunities. I've been focusing a lot on USD pairs, but it's been quite flat. In terms of the crosses haven't been quite doing it for me. CAD pairs, not quite. I do like Aussie CAD. The breakout we've seen recently, of course, another Aussie pair, which is absolutely flown as well. So that is showing a lot of strength there, although CAD's been weak, but yeah, Aussie doing its thing. I do like the continuations with this. I'm looking for pullbacks and some buying opportunities, but again, I don't see a good pullback and a buy until mid next week at the very earliest. Maybe in the week after might set up better. But Aussie CAD, I like the longs. Pound CAD, Euro CAD, I don't mind some shorts in that one, but it hasn't been playing ball. This is a more of an aggressive trade, so I have to be very careful with this position in terms of my entry and timing, because this trend is very much up, but I quite like the idea of potentially calling some tops here for another move back down. If price does just rally, because it is looking pretty bullish at the moment, if price does just rally here and fly, of course I back away. But the reason why I like the shorts is because every time price, similar to Aussie dollar as well, there's a pattern which I do like to trade a lot. Every time price does make a new high here, soon after it does come straight back down. And that's been very consistent since the high of March 11th. You can see every high, I've drawn that one as well, but you can see every high that price creates, push down, new high, push down, new high, push down, new high, possibly a push down. And then another reason why I like the trade as well is where we're located on the higher time frames. So you can see if you look to the left here, major resistance over here, massive selling pressure, big moves down. Could we see that happen again? Maybe not. Maybe price does rally through, but I know that from a seller's perspective, this is a relatively smart place to position yourself. Any kind of long-term position holders of EuroCAD probably looking at this area as a smart place to maybe book some profits. So naturally, could be seeing some buyers exit positions, and that might help in terms of seeing some more selling pressure come into the market. So in terms of where we're situated, it's an aggressive trade, yes, because the trend is obviously to the upside, which is why I'm being very careful with timing and actually taking a trade. But I quite like how we're trading in terms of the frequent highs price is making, and I like the location as well. So as a result, I'm keeping a close eye on some sells. And again, similar to the Aussie dollar position I mentioned, I'm looking for wicks, I'm looking for momentum. And these kind of local areas of support I have to be careful of as well. Let's say if I do get an entry, I'm going to be greeted with support pretty much instantly. So I have to watch out what price does here too. We could very much rally off that. If I can see price break through that, well, we could be looking good here. And the reason why I like this opportunity as well is because risk to reward. If this is going to top out, it could turn into a new trend. I'm not necessarily trying to catch a new trend. I'm also just see if I can push it back to kind of this area. But I will leave positions to run, and I might be in a very good position to take advantage of a big move. So I do like EuroCAD as well. I forgot to mention that one. Yeah, good point. What's up? Ahmed, welcome to the stream. Yeah, dollar CAD didn't work out too well, unfortunately. I was trying to take some shorts on that one, but unfortunately price did rally one more time. I am still pretty bearish in dollar CAD, so I am still looking for entries. Not quite there yet for me. We are seeing some momentum now. I think it's because DXY is melting right now. So yeah, DXY is looking really weak. Again, the CPI has been released, and price, of course, is having a bearish reaction, but we don't know to the extent of how bearish price will be. You know, at the moment, looking pretty bearish here, but by the end of the week, maybe we're trading down here. Then we can see the impact CPI has had. And then if that's the case, I'll be looking at pullbacks and more downside. But yeah, if the dollar does fall from here, I'm not too sure if dollar CAD does come to my area. I mean, in that case, you're just going to have to let bygones be bygones and miss out on that opportunity. But if it does push to the high, great. I can find an opportunity there. Anyway, guys, we have wrong word. We have made to the end of the segment, or my segment anyway. I do appreciate you guys having me on the stream, and I do really enjoy my time here, so I really do appreciate you guys having me on. Make sure you like the stream and subscribe to A1. If you want to check out my channel, I'm pretty sure the team have dropped my my link to my channel, so if you want to see more of me, check me out as well. But thanks for having me on. Hope everyone has a good day, and I'll catch you guys next week.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.